It's Tuesday, January 17th, and it's 12 o'clock p.m. Central Time. Um, just a quick update on how the beginning of the week is looking. This is dollar CAD. Not so good for the long position here. You can see that we have a correction going on to the downside, and this is a weekly chart. So we took our pattern off of this time frame, and so we're still in the trade. I mean, the reason that we got in hasn't been proved wrong just yet. That would be below this red line right here, and so pretty much just no man's land right now, and waiting for things to really either tell us we're wrong or progress in our direction and tell us we're right. This is a daily time frame now, and if you look at a lower time frame, one thing I've noticed here is that the up moves are very quick and a lot of momentum behind them, and then the down moves are kind of slow and extended. So that sort of gives me a bias to the upside, because we know money loves speed, and this is where on a time frame like this we can actually see visually that the speed is to the upside here. So we're right now down at a level of support, and we're seeing the buyers and sellers sort of duke it out. And when this range resolves, we will either move to the next area of support or move into the next area of resistance. All right. Moving on to Euro USD. I'm going to have to get rid of this blue rectangle. It's makes it difficult to see price. But anyways, the stop was initially behind this point up here. Kind of moved it down a little bit so that we're just capturing this high right here. So if price was to breach this high quite significantly, actually, we would be out of the trade. But giving it enough room so that if it does kind of poke up, fake people out, and shoot back down, then we're still safely in this trade. Again, this is a 4-hour chart. Looking at the 4-hour, you see the reversal bar forming here. So potentially showing us that, hey, there are still sellers in this market, and they might be willing to offer it lower than it currently is trading. As for cable, not too much going on here. Still well above the last line of support here. So really that's no trade as of right now. If we do get a solid breakout, then we'll look to take a position on that. Just want to take a quick look at the weekly, because this was essentially a weekly. This Head and Shoulders was a weekly setup, so we should be using the weekly as our guide. So again, a weekly close below this line would be ideal for a trade. So here's the Aussie. So last week we talked a little bit about are we going to take a trade on here? I decided not to, for a few reasons. So the first one, and probably the most obvious one, was that this is a magnet for the carry trade, right? Because the Aussie dollar, the interest rates in Australia are significantly higher than the interest rates in the U.S. So a lot of people will simply just buy the Australian dollar and sell the U.S. dollar and hold on to it just so they can collect interest. So that by itself gives this currency a fundamental bias to the upside, and as a result, over time, we generally see this as stronger than let's say the Euro USD or cable, because those the Euro and the British pound don't pay as much interest as the Australian dollar does. That's the first thing. Second thing was, I already had a position in Euro, and you generally you don't want to put too much risk on trades that are correlated with each other, because essentially you're putting the same trade on twice. And then lastly, the setup wasn't the best. We did have this reversal bar form at the top of the range, but we still had this trend line coming through. So, um, you know, this definitely makes it a stronger setup if we see some sort of failure here, back into this range. Um, but, again, we have to take the same consideration where, we're in the euro, and again, the fundamental um, bias to the upside on this one over the long term. Um, so, if I had to pick, I would rather take this setup here on the cable on the weekly, um, you pretty much for those reasons. So that's a little bit of what we're seeing in the markets right now, in terms of currencies. And then if we take it over to, well, it's still loading there. We'll do it the old-fashioned way. We'll pull up CNBC and a brief look at the stocks that I was in and how um, I managed those right now. So Bank of America, it's up on the day. It's off the highs, right? The high of the day was 82. We're trading at 66 right now. Actually, first thing we should do is take a look at the broad markets just to get an idea. I don't know exactly where that's trading. So, okay, so the S&Ps are up 10 points. Kind of just rolling on the day's highs here, looking perhaps to trade a little bit higher. So, let's change the candle, and then we'll make this, let's say, 3-minute candles. All right, so yeah, so a nice push up, kind of basing at the high here. A lot of times what you see is after lunch, people come in and push this higher. So let's see what happens. So going back to the actual individual stocks, we would expect these to both be up because the S&P is up. And here we are, Bank of America's up 5 cents, not too much. And then if you look at today's price action, it's looking a lot weaker than the S&Ps. So since this is a longer term trade, let's look at the 3-month daily chart. We'll pull up a candle chart. And so, one thing you see here is, sort of just like a breakout above 6, a nice run up, classic 2-candle pullback. And then today we managed to make a higher high than the previous day. I don't know why there's a huge gap here, but you can see that. So this right here would be the last candle, and obviously with Monday off, that's probably why there's a gap here. And this is today's candle. So the high here was 669. This is the high price to show up right here with my mouse over it. So 669 there, and then the high here is 682. So we very cleanly broke that high. And so the way I like to manage my trades is by just coming in the morning and just sitting down and saying, okay, if I was not in this position, I would answer it. And where would my stop go? And so, pretty much we have this nice run up showing us that there's upward momentum. We have a 2-candle pullback. Volume is decreasing, which is always good. And then the entry generally comes on a break of the high of this candle. So we had that today, right? We just discussed that. And then the stop goes just below the low of this candle. So, see this price action, I do think it's time to move my stop up to the low here. So the low here is 641. So we'll go 636 on the stop, leave a little bit of wiggle room just in case it wants to do a little fake out to the downside, and we've locked in. So the entry was 607, the stop is now at 636, so locking in almost 30 cents a share. And then finally, last one would be Walmart. Walmart hasn't been moving too much. Again, it's off today's highs, showing relative weakness once again. But looking at it from a 2-month chart, the stop was initially below this swing point down here. Again, approaching it in a way where we're saying, okay, well, if we weren't already in this trade, what would we do? Let's go to a 1-month here, 1-month daily chart. So what you have here is a reversal bar, right? Pullback reversal bar. You have sort of a basing pattern, and then you have a break above 60 right here today. So the high here was 60.11. So that would make for a valid entry, and then obviously your stop would go below the low of the range, which the bottom of the range is 58.37. I stopped down like 58.26, something like that. And looking for this trade to run, so we reduced the risk here quite significantly before we had to stop down at I don't remember the exact number, but it was below 57.42, and now it's sitting below 58.37. So reduce the risk by, let's say, 70, 80 cents a share. And yeah, that's it. So kind of just switching my trading from more of day trading to kind of swing trading. Um, don't want to make this video too long. 10 minutes is fine. Talk for a couple of minutes, but yeah, the reasoning behind that was it came to a point where it was more like why are you trading, right? And a lot of the reasons you put down on your list are because you want freedom, you want time to do other things in life, and I came to realize I was sitting in front of the screen for too long, and other things take a hit because of that. So um, I think that I can probably manage to do just as well, if not better, this way because you're less emotional about your trades. You're not there to watch them every single second, and that's something I've been seeing really. So let's see how this goes, and that'll be it for trading for the day. And I guess next time I'll be looking at this stuff is probably bright and early tomorrow morning. So, anyways, thanks for watching, and good luck out there.